The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman here, Tiger Technicians Hour. My pleasure to be here Monday through Friday, Eastern Time, 12 o'clock to 1 o'clock. Well, let's get to it. The Dow is up 23. Let me do them one at a time here. INDU. The Dow is up, at this particular stage, it is up 23 at 25,345. Has not taken out the high that was made. Let me just move this over right here. Has not taken the high of yesterday of 25,402.83. I'm just going to change this 402. Now, what's really important about this is that in the Dow, we've made a leg D, possible peak D if there's no new high today, recovery high. But what's really important, of course, we are way under, we are 1,200 points below the all-time high of 26,612. The diamonds have gone to a peak C if there's no high above 254.16, and they're up at 25.3.57, up 18 cents right now. That allows for a pop-up tomorrow morning, and then maybe in the afternoon with the Fed coming out, we get a turnaround. Let's just do one thing at a time. Let's go back to the Dow. I want to show you something very interesting. Look, the MACD has crossed positive and is very strong. The histogram is still expanding. That's big. It's up 62. That is the 0% line. And the stochastic is at 95%. That is big. That is really good. Not good enough if it doesn't flatten out and in 3 days' time is still in the mid-90s. You don't want to see a reversal that took place as it did recently back in the middle of May when the stochastic went to the 93% level and then suddenly slipped. The Dow went to a peak D at 25,086 on the 21st of May, and then declined to the 24,605 level as the stochastic plummeted and the MACD turned down. So this is very important because it's saying, and this is the reason why for subscribers we've remained long. Oh, I've got a webinar coming up on Thursday night. I'll talk about it throughout this show. What's really important about it is that in every webinar that I've had, we've discussed what I anticipated for the coming months. A lot of the time, it's pretty darn accurate based on the Chapman wave methodology. In this particular instance, we're right on the cusp of a bunch of things that are very important. Just take this chart here. The Dow has gone to a peak D with a little doji high in a left side, right side price time match to the high that was made back in the middle of March at 25,449. And that was exactly on the 12th of March. Pulls down to the 23,344 level. Remember, that was that slump into April. And then it has all these series of arches that are making higher highs and higher lows. And now all of a sudden we've gotten to this resistance level, which turns out to be, now let me move this away and let me move that away, which turns out to be where the arch is going to get tested, the second arch in the weekly chart. Look, first arch goes to 25,800, pulls back, and the only index, the Dow's only index to make a lower low in April at 23,344. Now it's ready to peak A, peak B, and it's in leg C to the upside. And what's really important about this is that you've got the second arch forming. So somewhere between right here, the 25,400 area, and the 25,000, I'm not sure about 800. Boy, you go to 800, I think you're going much higher. So I'd even put it just about right here in the middle of that candle, 25,600. So it's nothing really. It's 200 and something points. These days you could do it very quickly, but that's going to be important because if we start to break out you'll be getting the cup formation way more powerful than the second arch formation. And you'll get the MACD about to cross positive. That's always a good sign. And if that stochastic holds flat at 95% area in the daily chart, and the weekly stochastics at 66% and rallying, that's very good action. And that monthly chart is still very good. Reason why we're staying long, at least for now. Okay, couple of things. Support is now at 25,200 to 25,100. A break under 25,100 will say, uh-oh, be a little careful. Consolidation coming at this particular stage. Now, what's really important about this whole thing is that within the context of the breakout level, I've discussed that. But when you go to the SPX, this is the S&P 500. When you go to the S&P trading right now, up 6.99, let's call it up 7 at 27.88. It is within a fraction of taking out the high of yesterday of 2790.21. The high so far today is 2789.80. This makes it quite important. Why? Because if we store here, we don't make a new high, tomorrow both the diamonds, the Dow, the SPY, the same thing. Well, the A, B, C, the same thing here. Let me just put this in to make sure that we're talking apples to apples. Down, up, and here you are. So the SPY trading right now 279.22. I'm going to call this, I don't see any reason why I shouldn't call it this, is in a leg C and a possible peak C if there's no new recovery high today. And then you can get your pop to the upside tomorrow. That's what we were expecting for that Dow. Remember, we were talking about that yesterday. We wanted to see leg D, but I want everything in sync. So it looks to me like there's a chance leg C at this particular point in the daily, leg C in the weekly, and the weekly is also making a second arch. Here the MACD has turned positive already, and the stochastic is at 77%. It is stronger, and the weekly chart is suggesting that if there is a break above 280.41, the high of the week of the 16th of March, there's a really good chance that you're going to go to test the all-time high now rather than later. All right, QQQ. Let's go to QQQ trading at 175.75, up 0.86, up 0.49%. And that's very interesting because, you've got an alternate count E/B. The MACD is good. Stochastic is at 88%. Pulling back is still strong. On-balance volume is really strong. Weekly chart is in a leg C. This is above the 175.21 high of the week of the 17th of March, where it made a peak F before slumping to 153, 20 points down. Hey, that's big. That's what, 12% or something. Now, all of a sudden, the weekly chart has gone to a leg E. Wow, that's interesting. I didn't even notice that. I didn't even update that. A leg E in the, ahead, because this is, I lost some data. Right, leg E in the monthly chart. All of this is saying very good action. Forget about all the world news that's going on. The action here is quite good. All right, let's get on with the IWM. I just say the Qs have 173.50 as pretty important short-term support, and a break to the upside kind of open because all-time high. So the IWM at this particular stage is, before we go to a break, I want to get this in. IWM trading at 167.86, up $1.09.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yes, so looking at the IWM, the iShares Russell 2000, leg E, would this be another second instant restart? I'm not sure, because it's very unusual to do that in this particular instance. But it is leg E. I'm calling it E for now. In the daily chart, leg B, it's only a leg B in the weekly chart and that monthly. And this is really important. For a long time, I've been showing this green line, this trend line, going back to 2009. It really started in 2010. Yeah, about April of 2010. It turns out that if you go backwards, it's still a trend line. So it's an up channel, a long-term up channel that only briefly broke underneath the support red line, dashed red line, and that was in 2015 down to the low of 2016, February at 93.64 after hitting 129.10 in June of 2015. And then it goes right back into the channel, and then it starts an acceleration. These acceleration, remember, I like to look at them as 3, sometimes 4, as an acceleration trend lines to the upside. I'm going to talk about that a little bit in my webinar coming up Thursday night. Wow, I tell you, I always say that it's a really important moment in my webinar choices, because I spend a lot of time actually choosing the times for them, because it's usually at some kind of inflection point, meaning it's either the market's either going to continue in its direction or it's going to reverse course. And that's exactly what we discussed in great detail. That's what I'll be discussing in great detail. But this is the first time that we've seen the IWM break that resistance to the upside as it did to the downside back in December, January of 2015, going to 2016 low. So this is really important. The month is not even halfway through. So I don't know where it's going to close. I'm just saying this is the first time we've been above this trend line. A long-term 210 7-year trend line in the monthly chart. That's really important, and it's making this webinar even more important. Why? Because when you look at certain aspects, and I'll be discussing this, look at the RTH, the retail, absolutely dead in December of last year. I mean, we were talking death notices and obituary notices, and now look at it. It goes from the 74s up to 101. I mean, this is incredible action for the RTH. Look at Macy's, and I discussed Macy's in my last webinar. Look at this incredible move in leg C weekly leg B, gray leg B in the monthly chart, although it's really close to a buy signal, to buy mode, which will mean that it's going to go to a D. These are very important things, and I'll be discussing that because we want to know what's going on. Sometimes you might turn around and say, hey, I missed it, but just like Twitter, which almost every day I have on my list, and it just does not pull back. Twitter is up another $2.50 at 43.91. It was on my list. In fact, I think we once had it. Let me just double check. We had it for briefly. Yeah, we had it briefly. And now look at it. Every single day, just about, I've been saying to myself, when are we getting into Twitter? There was that peak D, turns out to be an instant restart. Hasn't closed under the 9-period exponential moving average since all of May, and now we're into June, and it's at 43.96. What do you do in a case like that? I think that Twitter has had the most advertising of any commercial product in history, because every single day there's a Twitter from a very famous person. I mean, now it's being recognized. And I think there's something going on here. Social media trading at 43.94. All right, let's get back to our story. So IWM parameters are very simple. Over the coming week, I'm giving it a Wednesday to Wednesday week. If there is a close under 165 to 164 support, in other words, we start to test 164s, we've made a short-term top, but the weekly chart is still very strong. Monthly chart is still very strong. Now, it's very important. Let's go to gold. Gold was a week earlier, then it tried to rally. Now it's down $1.06. And I'm saying this is stuck in a range. This is where I would grab my rectangle, the rectangle toolbar, and say, there it is, stuck in a range between the 1 to 1292 area and the 1310, 1311 area. Let's see if it can break out of there. Silver was up nicely earlier on. It's still now to 16.94. It's still the nice candle. I made a nominal new high, recovery high, that is in leg E, just above the 200-period moving average of 16.85. It's at 16.94. That weekly chart is improving, but it's not great. But it is improving. There's no question about it. Platinum, I want to just show you something very interesting. Platinum right now, same thing as as gold, except this is more at a higher level, sort of the mid-range of its bigger 930 to 880 range. It's really got a narrower 892 to 912 range right now, and it's trading at 902, down 360. I just wanted to show that. Also wanted to show corn. Corn right now, nice candle, good turnaround, made a peak D in the weekly chart, made a peak E. I wanted to show this. Maybe I'll use it in my webinar next week, just to show what can happen. What can happen in the right shoulder? This cup formation, this cup that goes to a double top Chapman wave inverted H, and what you get is what I call the drop bucket formation, and that took you from the 1850s down to the 1730s, and now we're trading at 17.47. Is this a turnaround? It'll only be a turnaround if we can hold above 1760 for 2 out of 3 sessions over the next week, but it's a start. Now I want to go to crude oil, get all this done. Crude oil, nice little rally here. Leg A, gray leg A in the daily chart. The weekly chart really says trading range between the 67.50s and must hold the 64 level, because otherwise it goes quickly to the 63.50, 62s. I think it's just in a trading range now. It's had a huge move, consolidating with a very deep pullback. A deep pullback says the 200-period moving average in the weekly at 67.55 is very strong resistance for now. Okay, now I want to go to the TLT, get these out of the way. A lot of questions. I'm going to go to Restoration Hardware straight after this. Spike to the peak B at 100, just over 122. Now it's trading at 119.10. Can't hold above the 9-period exponential moving average. Stuck in a range. And what does that mean? It means that if you're looking at the yields, the TNX, the yield right there is trading at 29.68, 2.968%. I've got to redo that as well. Darn nuisance. A, B, well, that was quick. Okay. So this is almost like crude oil. It's trading in a range, a high level range actually, compared to that monthly chart. I still have to consider it more as an F than a B, but I'm not going to do anything just yet. The MACD and stochastic are weak, but it is trading in the middle of the range between just over 31 and just under 28 is at 29.68. I'm going to be watching this closely. Why? Because tomorrow after the Fed meeting, if there is a push in yields in the TNX above 30.35, 30.40, that's going to suggest the yields are going to go higher. If there's a suddenly U-shaped a cup formation, let me say that again. If there is an arch, that's what I meant to say, the arch formation, that says that yields could probably go down a little bit, but I'll be watching to see if the market responds. If the market responds negatively, and tomorrow at 3:30 in the afternoon, make it 3 o'clock, after the Fed speak, if the Dow is down 80 points or more, S&P down 11 points or more, and that would say that there's a chance that bonds actually rally some and yields pull back. That's
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, so my subscriber event, Basil Chapman, June the 14th at 6 p.m. a week from tomorrow night. What am I talking about, a week from tomorrow? It is this Thursday night. It's going to be really important in terms of two things. One is I'm going to show you chart patterns more like the weekly, because I'm talking about the second half of the year, but my impression is that the first 3 months are going to really be important. Finally, it might even be it might even be up until mid-July. And we know a tremendous about what's going to happen over the year. Why? Because I'm going to be looking at certain factors, like the relationship of the transportation index to the Dow. I'm going to be looking at the retail sector. I'm going to be looking at the pharmaceuticals. You know, they've come on really strong. They were just dead. I'm going to talk about sectors that have been dead and came alive. Are they going to be, is this an ongoing thing or just a first half of the year phenomenon? Or in some cases, it's really just a 6-week phenomenon. These are really important. Why? Because for my subscribers, we've already started trying to position ourselves for this longer, this intermediate term situation. And I've been adding a couple of stocks. We added a stock yesterday, which I think is an under the radar, at this point, is under the radar in a sector that I think is going to be a real big hit, more ways than one, over the coming 6 months to a year, but probably even the next few years. There's just a whole bunch of things going on, and we are still long the dollar. We are still long one of the bank indexes. We have a kind of a mixed portfolio in the semiconductor index. Why? Because there's just been a huge over 30% gain that we've had going into this past week, and that has to be resolved. But it might be resolved a lot more viciously than some people think. And we actually are trying to prepare for that. Might have to prepare this a couple of times, but this is what we're thinking. There are aspects here that are very important in terms of the chart formation. So the first thing is looking at the patterns in relation to what we can expect over the coming months. And the next thing is what sectors could in fact have run out of time and energy and it will rest for a period. Maybe they'll come back later on. And what sectors look like they could be doing very well in this period ahead. So it's going to be, I really love this sort of thing. It's a huge challenge for me because, I mean, you're talking about the stock market. It's a huge super tanker. There are so many stocks, so many things going on. The other aspect that is really important, is within the context of yields, what are we going to do here? We've discussed yields. I've discussed my longer term outlook. That this is the first change that we've seen in a long time. Will we stop the Japanization of our bond yields? Are we about to see some kind of inflation? These are really important factors, and I usually like to deal with them. Usually we try to get stocks from the webinar. We start positioning ourselves for the next phase. We've already started doing that. We hope to add to that. Got a list of really nice looking stocks. So let's go there one more time, if I can actually remember where it is. And I can't remember. There it is. We're right there. So that's going to be the webinar coming up on Thursday night. Now, you'll be getting a 1-month subscription to be part of the webinar. You need to be a subscriber, but that's a money back guarantee for the 30 days. Now, what's really important is that every single day I show this. I show the, look, here's the Dow Daily. I explained that we were looking for a leg D in the Chapman wave. We got that leg D, and it's gone right to the resistance from the left side of 25,449. We almost got there. I talk about, and then I show them without the MACD and stochastic and the unbalanced volume, and then the same thing with in greater detail. Look how everything is very positive here. I go through the 120-minute chart. I go through every day. I give the list. I add, I have how many bullet points do I have? I have 15, but there are some parts that are like 9A, 9B, and even 9C. So it's just a whole series of things. You just look at what you need, and not only that, my Traders Corner has that first paragraph, kind of sums up everything we're looking at. So if you don't have a chance to look at, like over the weekend, there must have been 14 or more charts. If you don't have a chance to look at them, I just sum it up, and you go straight to your stocks that you want to be, whatever you want to be doing. Now, look, here's the 120-minute chart. It made that Chapman Wave 5. It made the peak D. This is the period where you should be getting a pullback. MACD's just turned down. Stochastic's now at 81%, still good, but on the 80% line, it's a little questionable. Here's the peak D. If we don't make a new high today in the daily chart, and if you look at the technicals, MACD is very strong. Stochastic is really good at 95%, but it is crossing negative here. This is a really important period. So this is so timely. Not only that, you'll be getting those new positions that we hope to be putting on or just starting right now. So let me go back to the story. We're looking at RH, and the reason why I got to the other aspects of my this Thursday why it's so important. Look, Restoration Hardware it's a type of thing that if you're redoing your house and you're trying to make it to upgrade it, this is where you would go, or at least this is the type of handles, the type of those accoutrements that you have in either a new house or a renovation or something that you're trying to upgrade. So comes out with really good earnings. It was looking kind of good yesterday, down at 119, bam, 159. It hit 164s, now it's trading at 160. So the question is, what the heck is this? Well, I have no choice because it was a peak G right there on the 24th of May at 106.40. And then it pulled back a little bit to 96.63. This has to be called an A because I've run out of letters. I can't even have an alternate count. This is an A. A's can fail, but there are certain conditions. However, if you're looking at Restoration Hardware weekly chart, it's in a leg C. MACD strong, stochastics at 89%. Well, daily stochastics at 94%. The MACD, of course, has had a huge move up because of today's gap. Now, I have a rule of thumb about the gaps. We've got a leg C in the monthly chart. So as a short, if you're thinking of this as just a short-term short position or a near-term short position, I say, okay, you're at 159 right now. I don't know what your stop would be, but certainly 1 penny over today's high. I wouldn't even be thinking of shorting it because, yes, it could fail, but today was the opportunity to gap and then fill that gap or close towards the low of the day. So far, it's holding like a rock at $41 at 159.77. So now I go to my 120-minute chart, and the 120-minute chart has it either in a Chapman wave leg F or alternate count B. My thinking here is it's more like a B because it would have just by now, after the news, you've had a whole bar, two bars of the 120-minute chart, and here you are looking at the second bar, not even going halfway into the body. So what I would say is, based on my 120-minute chart, if you were short, I would probably say I don't think, if it doesn't work between today and tomorrow at this time, between now and noon, give it today and tomorrow. It depends where you shorted, but if you shorted a little bit under the high, you could give it 3 points. I would say that if it goes 2 points up from here to 162.40s, actually if it even goes to 162, it's not going to come down right away. And that's why I want you to take a little time on this, because I want you to put it into context. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, Basil Chapman, Tiger Technicians Hour. We're back down 0.79. S&P's up 5, a little divergence there. Now, so Restoration Hardware, if you're short and it hasn't worked, I'm just saying, you know what? There are better shorts. Why are there better shorts? Because let's just say that this is short covering, right? If it was short covering, at this point you should have had at least one false move to the downside to tell all these shorts that, okay, maybe you covered, but now you can get back to short, because it slipped from the 161.50 level it's at right now, and it got to about the midway point of 157 to 156. Even if it rallied back, but it only rallied back 2 points, I said, aha, now I've got something for you. At this particular point, I think this is old buying plus some new buying. Plus, I don't think it was the speed of this thing. I don't think the shorts have really covered enough. I think it's going higher. And I would just say to you, if it started to break under 155, then I'd start considering it. Of course, you've lost the best part of your entry point, but either you take a 2-point buy stop right now from this level. No, 1 point at this stage. It's already rallied since we've been speaking. So it's now at 161.23. I wouldn't be shorting it. I would on Friday or Monday of next week. Consider it if certain things happen. It'll be a peak A failure if this thing closes towards the low of the day today and then takes out the low of today, the gap up. It's the low of 142.47. In the next 2 days, if it closes under that, I'd say, yep, now it's ready. But at this point, I don't think so. Okay, so now I wanted to put that in together with Home Depot. Look at Home Depot coming back so strongly in the monthly. The weekly chart, gray leg B, 86%. I have to think this is a blue leg B. I think there's the cap formation has just been repeating over and over and over in these charts. So I'm saying, and I'm going to be using this, I'm going to show a beautiful example between Home Depot and other things in my webinar. It's a kind of a benchmark, what you can use. So this is nice action. Look, the stochastic MACD, I'm calling it a leg A. It might be the same as Restoration Hardware. Could be a brand new leg A. I'm calling it a leg E for now, but it's acting very well. I'm not going to go against that. This is just nice action. So, okay, next thing. Would I look at the XAL? Sure, XAL. I'll get to there were a couple of other questions there. XAL is just stuck for now. And this is part of my IYT discussion on Thursday night. Look, yeah, comes your leg D that we're missing in the daily, and it's a leg C still in the, I must double check that, in the weekly. Yep, leg C in the weekly, and a very nice comeback in the monthly chart. I have to tell you, so far, even though I'm expecting some kind of a pullback, some of the action is very good. Question, would I look at Boeing? Sure, I look at Boeing. Oh, I don't want to look at Boeing. It's made a peak D. It's resting. It went to the 365 round number high that I mentioned before. It took that out. It went to over that. It went to 37. We went to 374.48 on the 7th of June. 378.48. Is that what I said? I think I said 374. 374. Yeah, so this is acting pretty nicely, I must say. It's completely, I said that Boeing is probably not going to make a new all-time high. Wrong. It made a beautiful cup formation, and now we're going to be seeing whether or not there is, and I'll talk about this on Thursday night. I'll put it together with the pattern we were looking at before that failed. The cup formation that has a chance to fail because the MACD deflects lower, didn't confirm the rally, and the stochastic, well, the stochastic's at 81%. In a way, it did confirm it. I'll talk about that. We've gone to leg F in the weekly chart, in the monthly chart. Yeah, this is worth talking about. I was totally wrong, but I did say Raytheon is going to be in a tough place, and Raytheon's gapping down today. It's down 576 at 206 after the peak F top in the weekly chart. I have to tell you, I don't think these defense stocks are going to do great. See, Boeing is also retail flyers. It's not a defense, it's more aerospace. Next question is Krone. Let me just get to that. Oh, yeah, okay, so let me do that. UTX. UTX is trading down 31 cents at 127.86 in leg C. I'm calling this a leg C in the Chapman wave. We've been long since the 119s. It's 127 hit 128. I like it. I like it. And I'm going to talk about stocks just like this in my webinar. We want to see stocks that if there is a serious major pullback in the market, can they hold the longs that we entered? And when the market turns back up again, will these be the leaders on the next move up? This is a question, that's all. But I've stated it as a question, and we're trading it as a question. Next question is Kron, C-R-O-N. Kron, oh, we looked at this the other day. Kronos, it's in leg A. 15. So this is in leg A, B, C. I thought I did it the other day. I might have lost the information. I did. I remember it well. So it's trading at 695. What's the question? Hi, Basil. On June the 4th, Kron closed at around number $7. What are your thoughts on the next, in the near future? I know you have the theories on round number closes. Yeah, okay, so I do have theories on round number closes. Remember, 112 was the round number high. I believe it was on the SMHs. 815 on the 7th of June. I put this into the category of slightly higher highs, slightly higher lows, and right now it's in the middle of the range. It could still pull back a little bit more, but at 696, if you've been watching this and you're following the sequence of waves, it just flush to the upside and then comes back again, and flush to the upside, as if you're going to high tide with a slow rise of the base, but you still got to get those waves going up and down and up and down. So I don't think it's looking too great. It looked much better if it held 750. It didn't. It went down to the 668 level. Yeah, I'm looking at it, and all I can say is if you're holding it long, I don't think I'd get out of it. C-R-O-N, and it's called Kronos Group, and I remember even writing down what it did. I can't remember anymore. So this is leg A, B, C. Leg C in the monthly, peak C in the monthly. I think it will go to a D, but it might take time. So all I can say is this is one that you want to put in your portfolio. I would hold it there if you've been long. Would I buy it right now? If my thinking was that the weekly keeps doing what I'm discussing, I'd say I'd have to be prepared for a test of the 630s. But at the same time, I think it's going to go to a new leg D above the $8.14. What did I say it was? $8.15 of the 7th. So yes, that's the way I would look at it. Probably if I was looking at it as fresh right now, with the MACD holding but the stochastic pulling back, I say, you know what, I'm prepared to wait a couple of days. I don't think you're going to miss out all that much. So that's the way I'm looking at it right there. Hector, yeah, that was for Hector. Julie wants to know about FCX. Oh man, FCX, I haven't looked at this. Look at this. Peak, I have this notated, right? So A, B, C, D, E, A, double top. Okay, it's trading at $7.83. FCX, Freeport McMoran, down 37 cents at 17.82. I'm just going to say, what's the question? In the Chapman wave? Oh, when I look at it, yes. So I'm looking at this and I'm saying that weekly chart has this trend line right here. I'm going to be more conservative about the trend line. It hit it, pull back. If FCX is able to close and hold on a weekly basis above $18.15, it's only 70 cents up from here, for one whole week, I would say that would make the base of support 1784 to 1750, and that would be a real good start and starting to continue the next phase of the weekly chart up move. Dow's up 2. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
So we're looking at YY. I thought it was transportation. Y is transportation. The YY is, what do they say? It says it's real-time online groups. Trading 115.45. It's kind of stuck in this range right now between 125 and 102. I'm just going to say that, would I buy it right here? Wow. I don't like to. I would have bought it maybe 3 points lower, but here, because this is exactly trying to fill the gap. It's a tough place. You know what I'm going to say? I'm going to give it 2 days. That's all. Maybe I'll miss it, but I would give it 2 days. If you're long, just hold it long. 105 is really, 106 to 105 is key support. It's at 115, it's way down as key support. So yeah, just hold it for now. So let me just do this because Thursday night's coming up real quickly. I'd like you to get as much information as possible. Look, we've already got, we had the SMH position right there from the 101 area of the SMH, but actually it was the SOXL, which was the 3 times long, and we've been scaling out of it, and now we're mostly out of it. I said keep a little bit, and in fact we actually added a little bit of a short position to it because I wanted to keep the one as a core, and as a fresh position, thinking that now's a big test for the SMHs. If they start to pull back, I want to be there. So just a small short, but we'll see what happens. Meantime, it's held beautifully, hit the 112 level. So we've been long, and as I say, it was about 32%, between 28 and 32% gain in that particular position, and just holding a little bit right now. We are still long the UTX, United Technologies. I'm saying all this because this is part of the webinar. We entered in the 119s and it's trading at 127, hit 128. Very nice. We're still long the dollar. The dollar from 90 hit 95, and now it's at 93.50. Still long, still holding it. We're actually long as a counter to the dollar, just as a more trading, just getting ready in case there's a big move at some point the other way. We bought the GDX, and we're up on the GDX, but it's just stuck. That's the gold miners. We have a position in, just trying to look through these things. Yeah, we have a position in a brokerage company. It's starting to do very nicely, but that's part of this whole thing of looking at the next few months to come. So I'm just trying to tell you what we're doing. We've been holding the diamonds, still long the diamonds. Only if certain things happen will we change that position. So check out my webinar coming out Thursday night, and you'll get my newsletter.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.